Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Phil Mackintosh, chief economist at Nasdaq, for an update on the latest COVID-19 news, the U.S. and global economies, and how investors are modeling out the impact of the coronavirus. And Phil, there's a lot that the market is pricing in terms of the economy and just how quick it's going to be. And should that be slower than expected, that could have some ramifications. Before we get into that, let's take a look at what's in focus this morning, everything from what's going on in Europe with funding to geopolitics to vaccination news.
Yeah, a mixture of good and bad news, I guess, isn't it? President Trump is talking about withdrawing from the WHO, the World Health Organization, completely because of claims that it's a puppet of China, which is not constructive in terms of getting the global economy running again. But at the same time, Germany and France have got behind a $500 billion euro recovery fund. So that's good news. And so there's a mixture of good and bad news coming out of the different countries around the world. And then we're in the middle of retail earnings season. And today that's been a little bit mixed. We've had great earnings from Walmart and a bit of a disappointment from Home Depot. So you've got a mixture of different news coming through today on the back of yesterday, which was a super strong day, on the back of potential good news for a vaccine.
Yeah, and hopefully that'll happen sooner than later, because if we look at our next couple of charts here with cases in the U.S. and Iran, it looks as if it's starting to uptick slightly.
Yeah, I mean, I think compared to the US caseload that we were looking at a couple of weeks ago, where we just kept getting spikes above 30,000, it looks like the last 2 weeks we're, I guess, more clearly heading on the downtrend. Although there's a lot of studies that show Europe and Asian countries that tackle this a little bit more aggressively. In the space of the 6 or 7 weeks, we are, since those initial sort of peak in cases, have crushed their curve and got down to sort of 80% below peak levels. We're still nowhere near that. The caseload in the US is, I guess, a result of a mixed implementation of shutdowns. It's a fact that the shutdowns in Seattle and New York and New Jersey happened much earlier. The cases are now sort of filtering through the middle of the country. And so we've actually got a different experience in different states across America, which is adding up to what looks like, I guess, a worse scenario than it is in the places that initially had COVID. It's interesting, obviously, the point of opening the economy up is just what we've been talking about, getting back to work the last few weeks. And it's something that, again, the president wants to get going faster rather than slower, is looking at something like Iran. And we looked at Germany yesterday and how successfully they seem to have reopened their country. Iran is an interesting counterpoint to that. They reopened their country because they were worried that there was too big an economic cost to stay shut down, even though they were having really good success crushing their curve, as you can see from this chart. But they didn't have testing in place. They didn't have tracing in place. And so as soon as people with COVID, and we know there's a lot of asymptomatic people that can still spread it, got in contact with other people who hadn't had it yet, there's a huge increase in cases. They don't know who's carrying it. You can't trace back to the people that are that need to self-isolate to get out of the society and try and help everybody else to travel around safely. And so they've had a second wave, or maybe arguably, if you look at this chart, a third wave in Iran. And that's what we don't want, because that's going to lead to further shutdowns and a whole second wave of businesses closing their doors and all of us working from home and not working for more weeks in the whole year.
So let's take a look at our last chart here, and it looks like equity markets are pricing in a rapid return to normal, because the forward PE actually looks like it was higher than when the economy was humming along. So are investors just basically waving off 2020?
It certainly seems that way. The forward PE today is actually closer to 21. So we're looking back sort of across this chart. You get back 30 years. It's a pretty expensive market when you're looking just at the forward price earnings ratio. So what does that tell you? It tells you that the people buying the stock market are actually pretty confident about longer term earnings rather than looking at the short term drop in earnings right now and the forecast for the next couple of quarters. So that sort of speaks to the fact that the market is pricing in a relatively quick recovery back to normal levels of earnings in a pretty short period of time. So maybe a V shape. And that's why we keep talking about whether we will have a V shape or a swoosh or a W shape if we get a second wave of cases. And that's why there's still a little bit of downside risk in the markets and in the pricing of equities. Although the tailwinds are, like we saw yesterday, the vaccine progress. And if we get a vaccine sometime this year and we can get it in the hands of most of the people in the world, which is billions of doses, but if we could get production ramped up, we could be back to normal in 2021. And that seems to be what the market's pricing in for earnings as well.
Yeah, it almost feels like it's going to be predicated on the headlines that are coming out, at least in the medium term, where we will continue to see those swings where we're up 1%, 2%, 3% on one day and down the other. It seems like these swings are going to continue to happen, at least until there's more visibility.
Yeah, I think the two big things to watch are the things we're looking at today. It's whether we have a second wave of cases and whether there's news on the vaccine.
All right, Phil. Thanks as always for joining us on Trade Talks.
Thanks, Jill.
All right, thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.